Okay, Assalamualaikum. I hope everyone is okay today. We are on our 4th day of Ramadan, and I hope that we have all done our best. Okay, so today we are going to continue with the topic balance day adjustment, and today we are going to focus on accruals and prepayment. I am your lecturer, Dr Lizz. So today we are going to look at this topic. So I hope you are ready now. Okay, so what does accrual-based concept mean? Okay, when we talk about accrual-based concept, I hope that you can remember what we have learned under accounting concept. Okay, so we have one accrual-based concept which deals with two things. Okay, the first one is it deals with expenses. So under accrual-based concept, it says that expenses must be recognized in the period it is incurred, not in the period it is paid. What does it mean? Okay, so for expenses, if you use the benefit is used in 2019, then the expenses must be recorded as 2019's income, not 2020, even though you paid for it in 2020. Okay, so that is what we mean by incurred. When did you use the service for that particular expenses? For example, the rent, if you rent a building, you use the building in 2019, but you only pay in 2020, then the expenses will be considered as 2019's expenses. Okay, another one is it deals with your income. So what about income? Under accrual-based concept, income must also be recognized in the period they are earned, not received. What do we mean by earned? Earn means the period that you give out your service to your customers. Even though your customers still do not pay you for that particular period, you still have to include it as your income for that particular year. Okay, so we look further. Okay, now so we look at it again one by one. Now we want to look at the expenses first. So as you can see, this is our expenses. Just now, as you can still remember, expenses has got to be recognized when it is incurred. Okay, not when it is paid. We look at which year do you incur it. So that is the year that you are going to record that expenses as your expenses. Okay, now let's look at it more clearly. Okay, so we have number one for expenses. We have number one, as you can see, accrued. We have accrued expenses. What does it mean, accrued expenses here? Accrued expenses is the expenses that you have incurred. You incurred, but you have not yet paid. Okay? You have incurred, but you have not yet paid. What does it mean? Okay, let's take for example. Okay, for example, we rent a building. Okay, the rate is 2,000 per month. For December 2019, you have used the benefit. Okay, you have used the benefit. However, you still do not pay. Okay, and when did you pay? You only pay for it in January 2020. So, is this December 2019's expenses or is it 2020's expenses? Okay, we assume that your accounting period is for a period of 1st January 2019 until 31st December 2019. So by right, anything that falls within this period has got to be recognized, okay, before you can prepare the financial statement. So now, December 2019, you have used the building, but you don't pay for it. You only pay for it in January 2019. So what are we going to do now? Are we going to say that this is is this the 2019's income, or is it the 2020's expenses? I'm sorry. Okay, so now let's look at this. December 2019 is when you incur the expenses. Why? Because you used the building in 2019. Okay? But then you have paid for it in January 2020. So, are we going to say that the 2000 here is the 2019's expenses, or is it the 2020's expenses? Okay, so we go back to our accrual-based concept. It says that the expenses has got to be recognized in the period it is incurred, not in which it is paid. Okay, so based on this accounting concept, then we can see that the 2000 rand for December 2019 will have to be considered as 2019's income. So it will fall here, income expenses, not as 2020's expenses, even though you pay for it in 2020. Okay? Okay, so for these kind of expenses, the expenses that you have already incurred, but you have not yet paid. Okay, it has already incurred but not yet paid. So for these type of expenses, we are going to call it accrued expenses. Okay, accrued expenses. So the accrued expenses here is you are actually owing someone. That is on 31st December 2019, you are owing someone some money because you have used the shop that you have rented, but you have not yet paid. So there is an obligation to pay. You owe them. And because of that, the accrued expenses, which is the rent of 2000, will be considered as your current liability. Okay, so it will go to your statement of financial position and it will be listed there as your current liability. Remember that, okay? Okay, now we look at the second one. Okay, so this is also the expenses. So as you can see here, we have another one that we call prepaid. Now, prepaid expenses. Okay, so when I say prepaid expenses, I think that you can all imagine this because you have already done this so many times before. What is it? For example, you have paid for your top-up card for your phone. That is what we call the prepaid, right? You have paid for the expenses, but you have not yet used the service. So we call it you have not yet incurred. But you have paid, but you have not yet incurred. Okay, so for these kind of expenses, we call it prepaid expenses. So what do we mean by prepaid expenses? Okay, now for prepaid expenses, let's say you buy some insurance. You take an insurance for your shop. Okay, so we have here an insurance. And this insurance here, the rate per month is 200 ringgit per month. However, you pay for it for every 6 months. Every 6 months, you will pay for your insurance. How much do you pay? Then you will pay for 1,200 ringgit. Why? 200 per month times with 6 months, then you get 1,200. So when did you pay? Let's say you paid for it on 1st of October 2019. Okay, you paid for it on 1st October 2019. How much do you pay? 1,200. So this insurance is actually for 6 months. 6 months here means for the period of 1st October 2019 up until 31st March 2020. So for these 6 months. So as you can see, this period will contain the period of 1st January to 31st March. This is in 2020. And for the period of 1st October until 31st December, this is in 2019. So we have 3 months in 2019 and 3 months in 2020. You have paid it on 1st October 2019. Okay, so what do we do now? Okay, so what we are going to do is that we have to separate this. 1,200 has got to be separated. Okay, the one for 2019 will go to 2019 and the one for 2020 will go to 2020's financial statement. Okay, so as you can see, for these 1,200, the first 3 months for 2019 at the amount of 600 ringgit will go to the financial statement in 2019 and another 600 for 2020 will go to the financial statement for 2020. Why is it? Because of this, the prepaid expenses. Prepaid expenses means you cannot include in your financial statement whatever amount that you have not yet incurred, even though you have already paid for it. Okay, you paid 1,200, but then the amount of 600 for 2020 has not yet been incurred on 31st December 2019. So this one must be excluded from 2019 income statement. It has got to be recorded in your 2020's financial statement. Okay, so as you can see, expenses which has already been paid in advance, the one that you have not yet incurred, even though you have already paid, will not be considered as your expenses for the year that you have paid, which is 2019. Okay, so this is what we call prepaid expenses. So at this time, on 31st December 2019, when you prepare your financial statement, this amount has not yet been incurred. Okay, so it means that whatever amount, the 600 here, is the amount that you are actually paying in advance. So by right, someone actually is holding your money for you. Okay, because you have not yet used the service, Someone has your money. Okay, when someone has your money, then you have a right to go to them and ask for your money back. So it is as if they are holding your money on your behalf. And because of that, this is actually your current asset. Okay, so this is your current asset. If you go to your statement of financial position, you will have under your current asset here, prepaid insurance at the amount of 600. Okay, only 600 for the year 2019 will be recognized as your expenses for 2019. Okay, so as you can see, in short, we have expenses. There are 2 types. That is accrued expenses. That is the expenses that you owe someone. You have not yet paid, so you have an obligation to pay. Okay, so these will be your current liability. Another types of expenses is the prepaid expenses, the one that you have paid in advance but you have not used the service because it is meant for the following period, the next accounting period. And because of that, you cannot recognize it as your expenses for the current year, but you have to consider it as your current asset. Okay, 6 months. Okay, what about income? Okay, income is the money that you receive. So now you are receiving some money. It can be the sales that you made. It can be whatever services that you have rendered. You get the money in. That is what we call income. So just like expenses, income also can be said as accrued or pre-received. Okay, so let's look at it one by one. The first one is this. Okay, you have some income. Now, this income is accrued. What do we mean by accrued here? Accrued income is the income that you have earned. Okay, you earn for it. Earn means it is yours. You have already given your services, but you still do not receive any money. Okay, you have give the services, but you haven't received any money. You have made the sales. Your customer has come to you, and then you have given them their money, but they have not yet. You have not yet received the payment. Means that your customer is actually owing you. Okay, for example, you receive some commission. Okay, for example, you receive some commission. And for this commission, it is actually for the sales that you have made in December 2019. You are supposed to receive the commission at the amount of 1,000. Okay, so by right, this amount has already been earned. It is supposed to be yours. However, you only receive it in January 2020. Okay, so is 1,000 here your income for 2019, or is it your income for 2020? Okay, so let's look at this accrual-based concept. Accrual-based concept says that income has got to be recognized when it is earned, not when you receive the money. So when we look at here, then it means that commission here has already been earned here in December 2019. This is when you earn. Okay, even though you receive in January 2020. So is this our 2019 or 2020's income? So obviously here you earn it in December 2019. So of course the income here should be recognized in 2020. Okay, so in this case then, as you can see here, someone has your money because they still haven't paid you for the service that you have already done. Okay, so when someone has your money, then it is actually your asset. So if you go to your statement of financial position, you will have accrued commission under your current asset. Okay, 1,000. Okay, so that is for accrued income. So we have another one, which is what we call as the besides the accrued income, we also have another one that we call as unearned income. Unearned income means the income that you have already received. You received the money already, but you have not yet earned. Why is it? Because you have not yet given the services to your customers. Okay, for example, your customer come to you and say that they want to buy some of your products. However, you cannot give your customer the products that you want to sell, maybe because it is out of stock, but your customer just want to pay you first. So you already received the money. When you receive the money, then it is said that you still have not yet earned the income because you have still not yet given the product. Okay, so the transaction is not yet completed. Okay, in such a case, then we can say that you are actually owing someone some money. Okay, so when you owe someone some money, then there is an obligation to pay because you are still not holding whatever that you can call yours. So that becomes your current liability. Okay, so it might be because of you are waiting for your product to come, but your customer insists on paying you first, so that becomes the unearned income. Okay, so as you can see that we have two types of income. The first one is what we call the accrued income, and the next one we call the unearned income. You have received the money, but you have not yet given out the services. Okay, so now let's look at the adjustment in the financial statement. How are we going to adjust this item in our financial statement? Okay, so now this is the example that we can have on how to adjust these accruals and prepayment in the adjustment in the financial statement. Okay, so what are we going to do if you have this question? Okay, so I take this from your manual. This is the example. For example, here we have, you are given the trial balance. Okay, the following information based on the books of BBC Trading. So this is actually the extract of the trial balance in the book of BBC Trading. So we have repair and maintenance, electricity, discount, dividend, rental, and also interest. Okay, and the following are the adjustment on the day of preparing the final accounts. Okay, so we have the first one, expenses below are not yet paid at the year end. So you have to remember, when you still have not yet paid, but you have already incurred. So what do we call this? Okay, you have paid, you have used it, but you have not yet paid. So if you can still remember, this is your expenses, which is your accrued expenses. Okay, so the first one is repair and maintenance. We have here 1220. I assume there is only 10 over there, and then the interest is 1420. So what do we do? Okay, now pay your attention here. So when you get this kind of question, repair and maintenance, it say you have not yet paid. When you have not yet paid, then meaning that this amount has not yet been included in your trial balance here because you haven't paid. So it will not be recorded in the trial balance. Okay, somehow this is the amount that you have already incurred. Remember the accrual concept? You must recognize it as your expenses in the period that you have incurred, not when you paid. So it means that the 1220 here must be recognized as your expenses for this period. Okay, so what do we do? You have to go back to your trial balance. Okay, go back to your trial balance and then look for repair and maintenance, and then you can see it here. Repair and maintenance here is 3,100. So this is the amount that you have already paid. Whatever comes in your trial balance are the amount that has already been paid. Okay, it doesn't matter whether you have incurred or you have not yet incurred. This is what you have already paid. Okay, and when you look back here, repair and maintenance 1220, this is the amount that you have not yet paid. It means that you have incurred but you have not yet paid. Okay, so 3,100 is what you have already paid. This is not yet paid. So this is actually this year's expenses. So what you have to do is you have to include this amount to 3,100. So what we do is 3,100 here must be added to the amount stated in the trial balance 1220. So you will have a new balance of 4320. So this is the amount of repair and maintenance for that period that must be taken to your statement of profit and loss. Let's say this is your statement of profit and loss. So what you will have here is repair and maintenance here will be 4320 instead of 3,100. Okay, and that is not the only adjustment that you have to make. Remember, okay, every information here must have two adjustments needed. If you don't do two adjustments, then your statement of financial position will not be balanced. Okay, so what is another adjustment that you must make that will be in your statement of financial position? Let's say this is your statement of financial position. Then repair and maintenance that you have not yet paid, it means accrued expenses. Accrued expenses, as you can still remember, is actually our current liabilities. Okay, so let's say this is your current liabilities. Under current liabilities here, okay, so what you do is you are going to record it here: accrued, repair and maintenance. Okay, how much is it? 1220. Okay, so this is one adjustment that we have made in our SOPL, and this is another adjustment that you have made in your SOFP. Two adjustments is necessary. Okay, when you have made two adjustments, then we can say that okay, we have done it. Then we look at the next one. Okay, the next one is interest. Interest here has not yet been paid. Okay, 1420. So what do? Okay, we go up here to our trial balance, look for interest. Can you find any interest? Then yes, this is it. Okay, I assume that there is a mistake here to this question. 5,000 shouldn't appear here, but it should be right here on the debit side. Okay, so now we go back to our illustration. So 1,420, this is the amount of interest that you have not yet paid. And then if you look at the interest here, you already have 5,000. Okay, so 5,000 here is the amount that you have already paid. Like I said, this is amount that you have already paid, but you still haven't paid 1420. But this amount actually belong to this year. So what you do, just like repair and maintenance, you have got to add it, 1420. So altogether here you will have 6420. Okay, so what do we do then? What do we do? How do we adjust it in our statement of financial statement? So this amount will have to go to our SOPL. Okay, you will have to write here interest. How much is it? The whole amount you put here, 6420. Okay, the whole amount. And you are owing someone some money, so it will be your current liability. So you will take it to your current liability. So here we have accrued interest. You write down the word accrued first. The accrued interest 1420. Okay, so you have done two adjustments. One is here, one is here. So two adjustments already, then settle. Okay, once you have done all that, then what we do is that you just cancel this off, because you have settled it. We don't want to look at it again because it's gonna be a waste of your time. Okay, so now let's look at the next information. It says that number 2, rental received is for the period of 1st April 2019 to 30th September 2019. Okay, so let's look at your trial balance again. It says that rental receipt. So we go up to our trial balance. You can see this is our rental, and you can see that we have 1,200 on the credit side because this is our income. So income is of credit nature, so it will be listed on the credit side. So this 1,200 here, it says that is for the period from 1st April 2019 to 30th September 2019. Okay, now look at our year end. Look at this. Extract of profit and loss for the year ended 30th June 2019. So your accounting period actually end on 30th June 2019. Okay, but your rental receipt is for the period of 1st April to 30th September 2019. Okay, so what does it mean? So it looks here that this until 30th September is actually after 30th June. So you have to break this period. You have to find how many months is it that fall within the current period. So it means from 1st April 2019 to 30th June 2019. So you have to calculate how many months. April, 30th June. April, May, June. So there are actually only 3 months here. Okay. Another 3 months from June to 30th September is another 3 months. So you have 3 plus 3 months. So 3 months only falls within the current accounting period. So what you do is this 1,200 here is actually should be divided into 3 months for current period and another 3 months for the next accounting period. So what can be recognized as our income is only 600 because 1,200 divided by 2, you get here 600. So 600 is for these 3 months and another 600 is for these 3 months. Okay, so what do we do now? So you can see that this is not our current accounting period. So it shall not be recognized as the income in this current period because you have earned, but you have received it, but you have not yet earned it. So what are we going to do? Okay, now what do we take is we are going to take it to our shopper. So here we are going to record our rental. Rental is actually should be under your income. So it will be somewhere here, revenue here. Okay, because this is your revenue in your shopper. Okay, so it will be rental. How much is it? It will be only 600. You cannot put 1,200 here because only 600 is earned. Okay, so we have not yet settled. Then what we do next is you are going to, because this is not your money yet, you have already received but you haven't earned, so it is not yours. So when it is not yours, then it becomes your current liabilities. So again, you go to your current liabilities, then you write here unearned rental. Okay, how much is it? 600. Okay, so we have looked at this now. We are going to look at the next one. Now remember, once you have started, please, you have finished, then please cancel it so that you don't have to look at it again and waste your time. Okay, now we look at the third one. 1040 of electricity bill was paid in advance. Means you have paid in advance. You have not yet incurred it, but you have already paid. Okay, when we say was paid in advance, you have paid. So when you have paid, you go up to your trial balance, go up here, then we can see that this is our electricity bill. Electricity bill has already been paid, but you have not yet used it because you pay in advance. So this is your prepaid expenses. Okay, prepaid expenses, you must remember that prepaid expenses is actually our current asset. Okay, because it is your money, you have not yet used it. Okay, so what we do is we go to our electricity bill. Because of you have not yet incurred, then you cannot consider it as part of your expenses, so it has got to be minus. Okay, so 5,500 minus with 1,1040. Okay, 1040. So you will get a new amount here, 4,460. So this is actually the electricity bill that you have incurred. Okay, we have to minus with whatever amount that you have paid in advance because it has not yet been incurred. Okay, so what do we do now? Okay, so in our Sopel, you go to our Sopel, then your electricity bill here will be recorded as 4460, not 5,500. Okay, and then because of this is what you have already paid in advance, means that this become your current asset. So in your statement of financial position, under your current asset, you will have one item that we say prepaid electricity of 1040. Okay, now we are done with adjustment number 3. Okay, so we look at the next one, number 4. Number 4 says dividend received amounting to 840 was still outstanding at the end of the period. Okay, when you say the word, you see the word outstanding, was still outstanding at the year end, it means that the amount is still not yet settled. If it is the expenses, then you have not yet paid. But if it is the income, it means that you have not yet received. Okay, so it must be something accrued here. Okay, so dividend received, 840 was still outstanding. Okay, now we want to look at our trial balance. You go to your trial balance and then you can see dividend there. And then when you look to your right, you can see that you have the amount on the debit side, 2,800, and you also have another amount on the credit side of 3,000. So, which figure are we going to use? Okay, so when you look at the question, it says dividend received. When we are talking about dividend received, then it means this is your income. Income will always have a credit nature. So because of that, it will be listed on the credit side. So this is what we will focus on, 3,000. Okay, not 2,200 because they will be dividend paid. Okay, so when you look at 3,000 here, this is the figure that we want to adjust. So it says that another 840 was still outstanding, means that you still have not yet received, even though you should have received. So this is what you have already earned, but you still have not yet received. So you have got to include it in your trial balance. Therefore, we must add it to the 3,000. So now we will have a new amount, and this is 3,840. Okay, so what we do is we will go to our statement of financial position, because this is your revenue, then we are going to put it here. Then we have here dividend income that you should have received should be 3,840, not 3,000. Okay, and because of this is the amount that is outstanding that you still have not yet received, even though you should have, then this is actually your money. Okay, your money, your asset, so it will go to your current asset. So under current asset, we will have here another one, accrued dividend received of 840. Okay, so you can see that we already have one adjustment made and another adjustment made. So altogether you have made two adjustments. Then we can say that you have completed this question. Okay, so this is how your income statement will look like. Okay, this is under your statement of financial position here. Revenue, your rental is 600, your dividend is 3840, and then for your expenses here we have repair and maintenance, interest, electricity. For your statement of financial position, then this is what you have. Okay, just arrange it accordingly nicely, because I do not really follow the format here because I'm limited of space. Okay, so I hope you can understand this topic. So I see you again for another topic. Until then, please do all your homework. Okay, so that's all. Thank you so much. It is your